In a previous video, I talked about how a trucking business owner gets paid as the owner of a single member LLC, right? That's when you own the whole business by yourself. And in the comments of that video, I got several requests to make a video about getting paid as an S corporation. So that's what I'm going to go over in this video. And in this video, when I say S corporation, I'm talking about when a one owner trucking company that's an LLC starts to be taxed as an S corp. So there are two ways to pay yourself as an S corp owner. It's the same way whether you are an owner operator that drives or an owner that doesn't drive like I was. The first way is through payroll. The second way is through distributions, and I'm going to go over an example of this later in this video. So the first way to pay yourself is through payroll. Now, if you remember from the previous video, and I'll link to that video, from the previous video, when you were just a single member LLC without S Corp status, you could just transfer money to yourself and there wasn't a lot of rules or requirements. But now as an S Corp, you must become an employee of your trucking company, start taking a payroll, and pay payroll taxes on your salary, which covers the Social Security and the Medicare. Now, when I say payroll, this is when you actually start receiving a check or direct deposit from your trucking company and taxes are being withheld. And those taxes are sent to the federal government and to the state, depending on which state you live in. And you receive the net pay of that check, just like you would if you were a W-2 company driver. Okay. Now, the second way to pay yourself is through distributions. Now, this is when you take money out of the business account and transfer it to your personal account. Similar to being a single member LLC without the S Corp status. The payroll company doesn't process these distributions. You don't pay payroll taxes on these distributions. No taxes are withheld from these distributions. So what I do is I write a check to myself from my business account to my personal account, and I write distribution on the check. Now, how often you do take that distribution, how often you take it, that really depends on you. You can do it monthly, weekly, quarterly, or whatever works for you. So let's go over an example of all this. All right, so in this example, we have a trucking company called John Doe Trucking LLC, and this company has elected to be taxed as an S corporation. So this company has filed the paperwork with the IRS to be taxed as an S corporation. Becoming an S corporation doesn't happen automatically. You must file the right paperwork with the IRS for this to happen. And let's look at how the year played out for John Doe Trucking. So he had $200,000 in revenue, $100,000 of expenses. Again, that's your fuel, maintenance, repairs, etc. Then there's $100,000 in profit left over. But as you can see, John hasn't paid himself anything yet. Well, remember, he's an S corporation now. So there's two ways he can get paid. The first way is his owner's salary. That's the first way. Then the second way is distributions. So let's see what happens here. So he paid himself a salary of $60,000. Now, if you remember from earlier, this $60,000 was on payroll. So John actually received a paycheck every week or every 2 weeks or however often he decided to pay himself to get this $60,000 throughout the year. That $60,000, if you remember from earlier, was subject to Medicare and Social Security or payroll taxes. So that $60,000, John paid 15.3% in payroll taxes. Okay? So after the $60,000 was paid, there's $40,000 left. So this is the profit after John paid himself a salary. Well, now, again, he's an S corporation. So this $40,000, John decides to take out $40,000 for distributions. John said, I want to take all the money out the business and I want to make it all a distribution to myself. Now, remember, this $40,000 that John receives was not through payroll. Was not through payroll. He did not have any taxes withheld on that $40,000. He did not pay any taxes on that $40,000. It was not processed through his payroll company at all. These are just checks that John wrote to himself throughout the year that equaled $40,000. Okay, so those are the two ways that John was paid this year. Now, the key, as you can see, the big thing with S corporations is you can save paying 15.3% in payroll taxes if you just limit your salary, if you limit the salary. So let me say it this way. If he was a single member LLC and he was not an S corporation, he would be paying this 15.3% on this entire $100,000 because single member LLCs without S election do not have any salary. They don't get it on payroll. So this entire $100,000 would be subject to that 15.3%. But he's an S corporation. So because he's an S corporation, what the IRS allows you to do is come up with a reasonable salary. And in this example, John says a reasonable salary in his case is $60,000. So that $60,000 is the only amount that is subject to this 15.3% in payroll taxes. So the other $40,000, John can just pull out without having to pay that 15.3% in payroll taxes. So what that looks like is a savings of close to $6,000. Well, how did you get that? Well, this 100,000 times about that 15% is $15,000. 15% of 60,000 is about $9,000. So the difference between that 15,000 and that 9,000 is $6,000 that he saves by being an S corporation. So it can be you can save a lot of money when you become an S corporation, but the key here is that you have to have a reasonable salary. Now the IRS isn't going to tell you what's reasonable, but you have to have a reasonable salary because the IRS knows you can get away with paying a lot less in payroll taxes every year. And they don't want you to completely take advantage of it where you're not paying yourself any salary, because then they could come back and audit you and say, well, these distributions should have actually been salary, so let's make them salary. And then they can assess fines and penalties. And you just really don't want to get in trouble with that. So what I would suggest is that you definitely work with an accountant or a CPA or a payroll service company to help you get all this set up. Now, what happens at tax time? So because you are an S corporation now, you have to file a return, a corporate income tax return called an 1120-S. So you file and you report all this information on your 1120-S every year. So you do that, and then you also file your 1040. That's the individual return you normally would file. Like if you were just a company driver, you would file a 1040 anyway. But now you have, because you're an S corporation, you have to file your 1120-S. So you report all the revenue and all the expenses on your 1120-S. The 1120-S then is going to issue John what is called a K1. Now, the 1120-S doesn't, stick with me on this. The 1120-S doesn't pay taxes, but you have to report all the revenue and expenses to the IRS on the 1120-S. But what you do is you issue John a K1, and that K1 is going to show all of John's profits that he had from this business. And you can see the profit after the salary was $40,000. Okay. So now John takes this K1 he gets from the business return that was filed, and he reports that on his 1040. So I'm going to take this 40,000 and I'm going to report that on my 1040, and that's going to be $40,000. Where'd I get the 40,000? Remember, that's the profit after his salary. So John's going to take this 1040. He's going to take the K1 from the 1120S, report that income on his 1040. So John so far has income of $40,000. But remember, John is an employee of this company as well. So he also has a W-2 that he gets from John Doe Trucking LLC. So his W-2 is $60,000. So John's total income on his 1040 is $100,000. $60,000 is from his W-2. And then he also reports the profits of his business on his individual 1040 return as well. And that's, remember, that's through a K1. As you can see, I've tried to make this as simple as possible, but it can get a little complex. That's why I highly recommend, when you are a single member LLC and you want to become an S corporation, make sure you speak with an accountant or a CPA that understands how all this works, so that this all gets set up correctly and you don't get hit with a lot of issues when it comes time to filing your taxes. All right, so that covers everything I wanted to go over in the video. I didn't want to make a big S Corp video. I just wanted to focus on the payroll pieces and the distribution pieces of how to get paid as an owner of an S corporation. So that's what I wanted to go over. Be sure to give the video a thumbs up on the way out if you like it, and I will see you in the next video. Thank you.